Hello, this is Douglas Arner. And at the beginning of the year, we looked at this idea that coming out of my new book with Dirk, Zetzsche, and Ross Buckley, we tried to identify what we view as, over the next 5 years, the areas where we're going to see the biggest changes at the intersection of finance, technology, and regulation. And top of that list is cross-border payments. And I think today, in light of a range of discussions around the world, it's a very good time to spend a little bit of time on why we think the next 5 years are going to transform the world of cross-border payments. And basically, if we think about the past 50 years, we've seen a digital technological revolution in payment systems. We can think about the implementation of real-time gross settlement systems, RTGS systems, today in over 130 countries around the world. We can think about the development of mobile money, starting in Kenya and then developed in the smartphone context, in the context of China. We can think about the advent of Bitcoin, blockchain, cryptocurrencies. We can think about the advent of stablecoins, fast payment systems, central bank digital currencies, and most recently, discussions around digital public infrastructures. And over this period, we have succeeded largely as a result of the use of new technologies and digitization of payments in bringing over 1.5 billion people all across the world into digital payments for the first time. Now, at the cross-border level, however, many challenges remain. And I think those challenges, from de-risking to correspondent banking to high fees to outdated infrastructure to data issues to geopolitical issues, these are all well known. What I want to focus in on what we think is going to happen first in retail payments, and then from the standpoint of wholesale payments and foreign exchange markets. In the context of retail payments, by far the biggest transformation over the past decade around the world has been the advent of fast payment systems. Systems like UPI in India or Pix in Brazil have fundamentally transformed the way that billions of people around the world make and receive payments. And the expectation of these people all over the world is that in the same way they can make a payment domestically with just a mobile phone number or an email address, they should be able to do the same thing on a cross-border basis. And our expectation is that in the context of middle-income countries and high-income countries, where we see over 70 countries today which have implemented fast payment systems, we expect the interlinkage of FPS projects to be transformational from the standpoint of retail cross-border payments. And this is being supported by the advent of projects like Project Nexus, linking together fast payment systems first in ASEAN, the Association of Southeast Asian Nations, and now being rolled out to an expanded group, as well as similar projects coming from the International Committee on Payments and Market Infrastructure and systems to try to link these fast payment systems. We see that transforming retail cross-border payments for middle-income countries and above over the next 5 years. From the standpoint of other countries, we see in many ways the most likely, biggest impact coming from the advent of regulated stablecoins. We've talked about the transition of digital assets into a regulated industry, and one aspect of that is a rollout of new regulatory systems for the licensing, authorization, and issuance of regulated stablecoins. And as we see the launch of major currency regulated stablecoins in an increasing range of major jurisdictions, we expect that this will evolve very rapidly into a major system for cross-border retail payments. And potentially, if we think about in the context of one related development, what are called tokenized deposits, this could have a bigger impact on wholesale payments. Now, if we look at wholesale payments, one thing that those FPS linkages don't do is deal with Forex issues. And increasingly, we're seeing a series of initiatives and projects coordinated, once again, by the Bank for International Settlements. Project Imbridge involves connecting a series of central banks to make it easier to bilaterally buy and sell their currencies to support wholesale transactions. Or another project, Project Agora. Project Agora brings together not only a wide number of central banks, but also a wide range of technological companies, financial sector participants, and it is looking at building an infrastructure which will not only make it easier to transact across bilateral currency pairs, but also from the standpoint of using those sorts of tokenized deposits, often tokenized forms of central bank money operated through the banking system. And as we look forward, we expect that these new technologies will make it simpler to trade more and more currencies on a bilateral basis. And this is the major trend that we're seeing internationally, which is towards countries looking to use not only their own currencies from the standpoint of borrowing and financing, but also from the standpoint of making cross-border payments. And I think what we're beginning to see is the fact that technology can make this an easier process, can increase liquidity across currencies, can reduce transaction costs, and make for better functioning markets. And in fact, this is exactly the subject of a new paper from my friends Ross Buckley, Dirk Zetzsche, and Anton Didinko, where we look at the role of technology in the evolution of the international monetary system, and we look forward in terms of what we think some of this technology could do to make it easier for countries to use their own currencies in the context of cross-border payments and transactions.